Hey everybody, it's Pete. Welcome to Stock Trading Pro. Today's Stock Market Live, we're going to review the call that we made on Monday from Meta and break down the entire trade. We got a couple of comments where people are picking out little parts of that trade. But more importantly, we've had this really nice 3-week rally in the stock market. There's been some good stocks that have been pretty easy to trade, quite honestly. And we're going to review those stocks. But more importantly, what we'd like to do here on Friday is recap the week, get us in the right mindset for how we could have traded this week, make sure that we learn from what happened this week, and more importantly, game plan the stocks that we like for the coming week. That's the big thing. The more prep you do, the easier it's going to be to find quality ideas. So today we're going to talk about the best stocks to buy now that are in my game plan. And more importantly, we're going to give you the exact list. And if we have some time today, we're actually going to review a couple of coaching call questions from last night. Our boot camp actually has coaching calls on Thursday afternoon at 4:30. Last night's call was roughly about an hour and 20 minutes. And there was some really good questions that I want to highlight today. And again, heading into the weekend, give you some things to think about to hopefully up-level your game in the stock market. So we got a bunch of stuff to talk about today. Stick around. I'll be back in just a second. Okay, so thank you so much for joining me here today. Actually, the very first thing we want to get to is we're going to actually break down Meta from last week. Obviously, Meta and the earnings that came out, Meta and actually Amazon. If you remember last week, we were looking at Meta and we were looking for the 120 to 125 level to hold after earnings. So we were basically looking at the level. Let me actually pull this out a little bit more. We were looking for this level right here. We went all the way back into 2017. We went to 2019, and then we looked at the same level over here. So the call that we were discussing on Meta on Friday, we broke down Meta in the bigger context from, let me take that off there, from a little bit bigger perspective where we were looking at the future cash flows. Cash flows were actually still good. The numbers were actually beat up a little bit because of currency issues right now. But here's the thing. This is what separates somebody from struggling to, I know exactly what I'm doing in the stock market and I'm in control of the outcome. We were very specific that we were talking about Meta as an investment. Let's not confuse investing with what the stock did in one day. There's a very, very big difference. Number two is knowing the actual trade that we outlined, which was very similar to what we talked about in IBM, also very similar to what we talked about in Netflix last week, which was we need the stock to open first, and it needs to open and show price action that supports our idea. We were looking for between 120 and 125 on the stock, and we were very clear that if it opened up near that level, we were going to start to look to build a P1 position. After earnings came out in Meta stock, it actually shot right up to 140. And then as the numbers started to get digested, and I think that big number that spooked a lot of people was the $9 billion investment in the metaverse so far. A lot of people on CNBC almost saying it's reckless at this point because they don't have proof of concept. If you know anything about a business, you want to start you obviously doing your research and development, and then you put it out to market and you put out what's called the minimum viable product before you start to put more money behind it. And that $9 billion number spooked a lot of people at this particular moment. Their ad revenue has still been pretty solid. They got 3 billion average daily users right now. So again, the two things is don't confuse a trade for what the stock did in one day with an investment. We were really, really specific that we were talking about an investment and the fundamental data in metaverse. We weren't talking about what it did Friday and then being done with the position. Now that we're down close to that $100 level, even sub 100, it's actually down at 98 and change right now. We're looking to see if buyers step in and hold this level. So the 120, 125 level that we game planned for after earnings did not hold, so there was nothing to do. Now we have a new line in the sand, which is that $100 level. So again, I just want to be clear with everybody, and this will really catapult your stock market results in a really big way, is to know the objective of the trade. We normally talk about short-term stuff here. We're normally talking about trades from anywhere from 3 days to 3 weeks, maybe even a month. We were super clear that Meta was an investment idea waiting to start to build a position. So let's make sure that we have the objective correct with how we're looking at the stock. All right. Amazon also got crushed pretty hard yesterday. It was actually down 20% at one point, and now you can see Amazon is also below 100, not quite down 20%, but you can see 15% even from where it was yesterday. Mapping it out, the $100 level. Again, if you read Reminiscences of a Stock Operator, Jesse Livermore, very big on what he calls par. Par is known as 100, and we're kind of dancing. You can see it was a big level here. Let's just keep working our way around. Look at that. Look at that. Big breakout level there, support there, and we're kind of just below that as well right now. Good morning, Min. How's it going? All right. So what does that mean now for both Meta and Amazon? Are they, let's get in there now, it's $100, it's so much cheaper than it was before? Well, no. What we need to see now is we need to build out an argument of the best stocks to buy based on where they are and what we expect them to do before we start to dip our toes into those ideas. So I'm just going to straight up give you the argument, the marketing argument, or the market argument, or the thesis for the idea. I actually like both of them around this significant support level, but I am not starting to build a position until I actually see them stop going down. That's the big thing right now. 100 is pretty interesting. Meta actually went up to 102 and change yesterday before pulling back at the end of the day. Amazon, as we said, got crushed. 20 or 21.5%. It was down yesterday afternoon. It's actually bounced back around 800. But here's the thing that we want to see, and we want to write this down. This is very important. I want to see both weekly charts go well bid. Now, what that means on the weekly candlesticks, and if you're not familiar with what a weekly chart is, this is the daily chart. This is the one that most people take a look at. But we're going to go up one time frame, and we're going to go out to the weekly charts. So what we're essentially looking for is this. Right now, Amazon, and let's take a look at Meta, which obviously these are the two big ones that we're talking about. Meta right now is what's known as well offered. And well offered means that you have lower lows and lower highs. Amazon actually has something known as what's called a bearish U-turn, where we traded above the previous candle, pulled back down, and now it's closed below the open. So as of right now, we don't have proof from the stock market that buyers are stepping in and loving this level, despite how much you might have watched on CNBC or Bloomberg or whatever you happen to watch right now. There's a lot of people saying this is the entry of the century around 100. I kind of like this level, but again, very similar to the game plan that we mapped out last week. As an investment, I want to see buyers step in and make both stocks go well bid on the weekly chart. So I want to give you a visual, and you might want to take a screenshot of this because this is actually the area that we're looking at right now. As of right now, you can see it's pulled back and closed near the lows. I want to see this. I want to see higher highs and higher lows on the weekly chart. If that happens, if and when that happens, regardless of the price, that now tells me that somebody with deep pockets has now stepped up, started buying, and the phrase that we use in our community all the time is called well bid. Well bid now means higher highs, higher lows, and closing near the highs. So over a 10-day period, which is 2 weekly candlesticks, 1 week compiled by the next week, they're pushing it up and holding it there. When I see that, that's when I will start to look for an entry in both of those stocks. So I just want to be super clear about that. Now, that's on the other side of the market. The bullish side of the market, there's plenty of stocks that are already doing what we're looking to see them do. And those are the stocks that we're going to start to take a look at now. So the new stock picks we're going to be talking about are stocks that are showing relative strength to the weakness in the market. And there's some very interesting and quite frankly, some popular sectors that a lot of people trade. If you remember last week, we called out one of them that was kind of showing signs of well bid, exactly what we just showed you. They were well bid on the daily charts. So the daily chart had a higher high and higher low, and then that pushed its way over to the weekly chart. So now we have longer time frames of somebody with deep pockets spending money. It's one thing for it to happen for an hour. It's one thing for it to happen one day. But when you start to see it from 1 week to the next, man, there is some real money. I got my wallet over here. There's some real money being spent on that to push a stock up for 10 days and beyond. So that should have our attention. So if the smart money has attention on a stock, then maybe we should too. We just need to see how long they've been doing it. But here's the last part of that. Is there still profit potential on that trade? And are you buying it near the optimal entry? So we're going to actually break down sector rotation. But before we do that, I want to actually get into the market. And I want to walk through the market from a what's likely to happen next perspective, and what would we need to see happen that would let us have more conviction in buying stocks. So to really make that simple, what are we looking at and what do we want to see next? So now we're actually going to work our way back over to the weekly charts of the market. So we're going to start out with the market, and we're going to take a look first at the SPY. And if this kind of stuff is, if what we're about to talk about and how we break down the stock market is new to you, I'm going to put something up on the screen. I want you to take a screenshot of it, because this is the process and the literal sequence that I look at every single day when I do the research for our community. So again, if you're not sure what that research is, this is the stuff that I give everybody in our community every night. And you can see we break it all the way down to stocks in play, stacked order flow. But everything that we do starts out with this. It starts out with the stock market power pyramid. So you can see that we start out, the first question is the market obvious? Yes or no, in the time frame that we're looking at the trade. Then we work our way up. Are there any sectors that are doing the same thing as the market? So that means that we're working our way over to this list. So once we know what we're looking at in the market, then we say, are there any stocks doing the same thing as the market? And then within that sector, are there certain industry groups and then stocks? So the visualization of the stock market power pyramid is how strong is the foundation under your idea? That's really what we're trying to get across here. Do you have the big wide picture of the market under your idea supporting if you want to be a buyer? Is individual sectors doing the same thing? And you work your way up. So while we're working our way up there, we're going to actually go back over to the market, and we're going to stick with the weekly charts. Now, looking at the market on the weekly charts, we're still in what is known as bearish order flow. This big line is still pointing down, which is very, very different from the line that we saw here last year. This is the challenge that a lot of people have had coming into this year. I'm going to actually just pull this up to 2021. Now, we get a lot of questions about risk. We get a lot of questions about how to make money. This is actually a pretty stark picture right now that everybody really needs to wrap their head around and say, what kind of market conditions are we in right now? And what does that mean for the kind of risk I'm okay with taking? Now, let's actually unwrap that for a second. What kind of market conditions are we in right now? Right now, we're in selling, versus 2021, the stock market was in a buying condition. So let's wrap that question up one more time. You might want to watch this video and write this down just to really bring these lessons home. What kind of market are we in right now? And what does that mean for my trade objective? So last year in 2021, the market was pretty much going up almost every day. I think we had 54 new all-time highs last year. And it was easier to look for spots to buy. And here's the important thing, and hold those trades longer, because the big picture, the bottom of that pyramid, was going up. So it was supporting your idea. This year in 2022, it's a different picture. You could actually see that we're pointing down, and some moments of this year, we went down pretty strongly. And that means that what we might see here is the bearish tone of the market is the dominant force in the market right now. So what does that mean if you only like to buy stocks, and how long you should be looking to hold them based on the bottom of that pyramid, which is the dominant force in the market, which right now is selling pressure? Any stocks that we're looking to buy right now in the context of the big picture, for the most part, we're doing what's called cash flow trades. Those cash flow trades are, if we pick a good stock and it starts to move in our favor, we're going to have a much more aggressive trailing stop loss and book those profits a little bit quicker and not give them room, because last year we were going straight up. You could give them extra room. This year we're going down, and any stocks that we buy, we trail them higher, and then if and when the stocks reverse a little bit, we're booking the profits and we're going to the next trade. So the big question is, when we're looking at stocks to buy, how would we know that we should be hunting bigger profits, maybe more share size, maybe more positions, but definitely holding winners longer? Well, let's map that out and what's going on right now. But first, we're going to break down the market. So you can actually see that the SPY ETF, the S&P 500, you can see it's bearish, big picture for the year. We've had some pretty aggressive selling. Now, we're going to zoom in over here. If you remember what we just discussed with Amazon and Meta, we were looking at, we want the weekly charts to go well bid, which is higher highs and higher lows, and we want to see them green, and we want a best case scenario, see them closing near the highs. So that means through the entire 5-day period, it opened down here on Monday, and then when Friday came along, that buying pressure, they kept buying more and buying more and buying more, and they pushed it all the way up there. So in the SPY ETF right now, we are actually well bid, but we're well off the highs. So you can see that right now. It's not up here. It's all the way down here. So still good, but it's changing. If we go over to the NASDAQ and look at that same picture, you can see the NASDAQ is still well bid, but look at how different this picture is. It's actually near the low. So all of the earnings on these large cap NASDAQ stocks are pushing the NASDAQ down. And if you watch our channel often, you know we are constantly talking about a push and a pause, right? Now we have a push down and a pause, a push down and a pause, and the NASDAQ is near the low for the week. So this is where it really gets kind of interesting. If you know what we talk about all the time, we talk about order flow and tape reading. Tape reading is the second part. The chart of the QQQ, the NASDAQ, is still technically well bid. It does have a higher high and a higher low, but it's all the way on the bottom and it's red, versus the S&P 500, which is also well bid, but that one's green. Green or red, that's what we're looking for. So here's what we basically want to say. The NASDAQ right now, because of all of these tech stocks' bad earnings, is relatively weak. So the tech stocks right now are not showing bullish order flow. The one sector that is, or the one part of that parapyramid that is the Dow Jones Industrial Average. And you can see the difference in the Dow right now, even though it's got a little bit longer term movement to the downside, like the rest of the market, right? Definitely a bigger picture to the downside. You can see that we are green, buying pressure from Monday, and also near the highs. Now, the question that comes in, if we are actually watching now and saying that the Dow Jones Industrial Average has a little bit of relative strength compared to the S&P 500 and compared to the NASDAQ, which is actually showing relative weakness, why is that happening? And how do we make stock picks that take advantage of that? And that's now where we go up the power pyramid one more sector. And now we start to take a look at sector rotation. So when we take a look at that part of the group, we're going to work our way over here into these groups. So let me actually zoom that in just a little bit easier so you can see it. And that, in case you don't know, this is actually the research that I provide for our community every day. And you can see we track the sector rotation every day. But now you can see the industrials and financials are actually having a really good month and a really good week. Both of them are at the top of the list. And that is a big part of the Dow Jones. So if you take a look and you see the stocks that are in the Dow Jones, we have some large cap industrial stocks in there that are such as holding them up. So what does that mean? How does that translate into ideas? Well, now we're going to take a look at the stocks that have recently reported, both in the industrial stocks as well as the financial stocks, for which of those stocks would be the best stocks to buy now for me in my game plan going forward. So we're going to make a list right now of financial stocks and industrial stocks. And specifically on the financial side of things, we're going to be looking at bank stocks. One of my favorite stocks to trade, I think forever actually, is JP Morgan. And that stock has had some really, really good price action since earnings came out, but more specifically over this week, where it paused a little bit and then had some buying pressure come in. Caterpillar reported yesterday, FedEx reported, and some of these stocks, Raytheon reported, even Boeing actually had some good numbers, got hit a little bit the other day, came storming back. So this is the way that we work our way up that pyramid from where is the market, pick a direction, right? Okay, that's the direction. Now, which stocks can I lean on that would be doing the same thing? So you have those two bottom pieces of the market in your favor. So you have a rock solid argument to say, if I'm going to put my hard-earned money in the way of the market and accept that risk, I want to know how much of a foundation do I have under that idea. So again, I'm going to pull this up in case you didn't do it. You want to take a snapshot of this power pyramid because this is actually where everything starts. So this is the first question, right? It's literally the first question of what to buy. What to buy is built on the foundation of these two core pieces of the argument that you have underneath your idea. So as we work our way across and we start to look at some more ideas, I'm now going to give you an opportunity to go a little bit behind the scenes. Everything we're talking about right now is called stacking the order flow. That's a big part of what we do. We're stacking the market. We're stacking the groups. We're stacking how long buying or selling pressure has been going on. And then there's no reason to predict. We're basically saying that's what's happening. Here's all the reasons we like it. So it's probably going to happen and continue. The only last question we need to answer is right now the right time to buy? And again, if you've been a regular viewer of the channel, you know that we call that the optimal entry. Actually, if you could do me a favor, if we're doing a good job, just do me a favor, make sure you hit the subscribe button and give us a thumbs up. It lets me know that this is the kind of content that you like. I'd really appreciate it. So now we're going to go a little bit further behind the scenes, and we're actually going to take a look at the individual stocks and how we break them down. So industrial stocks, we talked about. Again, Caterpillar was the big mover yesterday and this week, and you can see the kind of week it's happening. And we'll actually break that down. So just to be clear on Caterpillar, the next level of profit target is up towards the 230, 232 level. But you can see what the stock has actually done this week, and more specifically over the last 5 days of trading, all the way up to yesterday's high. That's a 20-something% move. That's a pretty big move. So now here's where we really start to get in a little bit more specific on the actual trade. I have been trading Caterpillar for a while now, and I know that $200 is a very specific level in Caterpillar. It's also gone well beyond what it normally does. It kind of catapulted through that level after earnings yesterday. So great job if you happen to have it. But now we're setting up the next trade, maybe the trade for next week. So what I want to do in Caterpillar and that industrial stock group, so industrials are at the top of that list, I want to see the reward potential line up a little better with the risk. So what that means for me for a trade next week as a swing trade in Caterpillar is I want to try and buy it as close to as I can to the $200 level. So I need for it to pull back just a little bit, which will then expand the profit potential between 200 and 232. So let's actually map out and take a look what that looks like on the chart. So if we take this off the screen, you can see this is the 200 level over here, which again, you can look at how significant that is. It was support. Let's actually zoom that out. You think 200 is a significant level? All this time hovering right around 200. Now, we also know that up in this area around 230, 232 is the next level. We also know this has gone too far recently for me to justify that accepting this risk, which is right around 200, is not what I want to do right now. So what I want to see happen is I want to see where it is now pull back just a little bit so that I have a better risk profile. So it's got to pull back a little bit for the next trade up to 200. So essentially what we just walked you through is this is the kind of stuff I do every day in the community, where we first talk about what is the market doing, then what are the best ideas from a sector perspective. We also just talked about that industrial stocks and financial stocks right now have a lot of my attention because they have buying pressure. So again, I'm just going to walk you through a couple of the financial stocks that have been on the radar. JP Morgan has been one that has performed really, really well. Goldman Sachs has been performing relatively well as well. One other stock that really hasn't been, that needs to catch up a little bit. I love to trade Morgan Stanley. It just hasn't been in play as much recently. But then we start to work our way over to what other parts of the area are trading well, and you start to do your scans. So actually, American Express, it's doing okay. If we go back out to the weekly charts, you can actually see that now this week it's well bid. Higher highs, higher lows, and as of this moment is near the high. Two other ones that caught my attention this week, MasterCard and Visa. Visa and MasterCard both having pretty solid weeks. But now if we break that down into where they are now, you can clearly see there's some room to go. And 1, 2, 3, 4, 5 days in a row where there's been buying in MasterCard and Visa. So we're kind of working our way a little bit differently now through the rotation. So we talked about the financial sector, the bigger picture of the financial sector. And now I'm like, okay, but I need to find ideas that still have profit potential. So this is where we work our way up again. So I just want to pull this up again because this is kind of cool. When you have the structure for how to look at the stock market, I want to say this very clearly because I believe it's true and we do it every day in our community. When you know what you're looking for, you're no longer lost. And that's what I'm hopefully showing you right now is I'm showing you what to look for, and then we have to set up the trades. Now, I want to be super clear about this. Finding ideas is one skill. Making money is a different skill. So we need to clarify that they're two different things. And a lot of people believe that just finding ideas is trading. That is not trading. That's passing your road test when you want to drive cars. You looked at it, and there's nothing to do yet. You actually haven't done something. The actual part of trading is what happens between entry and exit and managing that trade. So what's kind of fun about this now is we talked about financials, but now we broke it down even a little bit deeper where we went to banks, and now we're taking a look at processing companies, which means we're going up one level. So now we're talking about specific industry groups. So we're now talking about Visa, MasterCard, American Express. Maybe we can even throw PayPal in there, but PayPal has some selling pressure. If we work our way through another group of stocks that we trade quite a bit in our community, which is the solar stocks, they are technically technology stocks, but they are an industry group within technology. Another very popular one that has had some very good buying pressure recently, the last 2 weeks, is in the technology sector. One level above that is semiconductor stocks. So you can actually take a look here. Technology is the sector, and then the industry group is the semiconductor stock. So if we actually break that down a little bit further, I just want to really give you a really big process for the weekend. So if you know the minimum viable criteria that I use, I have very specific criteria before I look at any stock. I want liquidity and I want volatility. Volatility is opportunity. So if we break that down into technology, 57 stocks meet this minimum criteria. But then if we break that down even more, and we want to say which tech stocks are showing strength, we're going to look at them above the 50-period moving average. That broke it down even more. And which ones are actually positive for the last month. And that broke it down to 12. So what we do now is we start to break it down even further. And you can see software is leading that list. If we break this down a little bit differently and we take this out of there, and I want to get back into showing you the implementation of what we just looked at. So now technology, and we're going to look at semiconductors. So we got two different groups of semiconductors, equipment manufacturers and applied materials. You can see how strong that stock has been over the last week. Pretty nice picture right there over the last few weeks. So what is the point that I'm trying to get across here, right? We actually had a question on last night's coaching session, and I'm going to give you those questions in a second. The question that was asked last night is, how do I find good ideas in the current market conditions? I only like to buy stocks, but the market is going down pretty much for 2022. So how do I buy stocks when the stock market is going down and have confidence that those stocks are good ideas in that moment? So what I just taught you today and what we kind of did together as a group is I walked you through the stock market power pyramid at a very high level view of it, but walking you through that if you do that little bit of extra scanning, that little bit of extra research based on that structure that I just showed you, the market, the sectors, the groups, and then the individual stocks. Once you know what you're looking for, you're not lost anymore. Once you know what you're looking for, it becomes easier to know, is it obvious and is it there? Or is it obvious but in the wrong direction? Once you know the answers to those two things, then the only thing you have to do at that point is, number one, if it's there, ask the last question, which is risk reward valid if I buy right now? So in other words, we need to know how much a stock normally moves. Is all of that move still available? I'm going to give you an example right now in JP Morgan, where we were trading JP Morgan pretty much every day. We had this stock, it rocketed higher after earnings, and we're like, okay, 120 area resistance. That's where sellers came in the last time. I love it after earnings, bullish gap, bullish gap, bullish gap, right? Absolutely fantastic. And you're like, yeah, let's go get it, right? No. And I'll tell you why. We have to say, if I buy right now, even if the idea is good, which should obviously be the only time you're looking to buy, if I buy right now, is the reward potential likely for the risk I have to take? In this particular example, even though it was showing buying pressure, buying after, at this moment, after 4 days to the upside, which is a mistake that a lot of people make. They chase price. The risk reward was not valid. So what we did was we waited for this pullback. So now you can see that it paused a little bit, reset the buying pressure, and then we got that over the next week or so. So this is really where we make that last part of the equation. Okay, we went through the market, we went through the sectors, we found a group of stocks that we like. Now let's go find the individual trades that make sense from a risk reward perspective. Covered a lot of good stuff today, right? I'm going to show you something else, two things. I want you to be able to take a screenshot of this right now. So we're going to go behind the scenes. I just gave you a bunch of ideas, right? Now I'm going to give you the list of stocks that have stacked order flow heading into Friday. And then you could use the same exact process that we just used. Go and see which of these ideas make sense from a trading perspective. Because remember, stocks that meet a scan criteria don't always mean they're an opportunity to buy those stocks right now. And we just proved that to you in JP Morgan, because JP Morgan met all of that criteria. But at that moment, after rallying really strong for 5 days, it wasn't a good buying opportunity at that moment. We waited for the pause after the push, which led to another push. So we make money during the push. We manage risk during the pause. So you're going to take a screenshot of this now. I just want to pull this up for you. And I'll come off the screen. And we're going to take a look at the stocks with stacked order flow. So these are the 14 stocks that you can see meet the criteria over multiple different types of stacked order flow. And these are the ones that we're going to be looking at in the list today. Now, I can tell you right off the gate, DLTR has rocketed over the last week. And we actually had a good conversation about this today. Why would DLTR be rocketing to the upside right now? And this is how you kind of like read the headlines. You're like, wow, maybe I should look at that stock. Inflation, recession, everything's expensive. What stores might be busy during inflation? Maybe a dollar store, right? Maybe Dollar Tree. So let's take a look at that stock right now, and you get an idea of how you can use some common sense to determine some ideas. And this is what DLTR has done over the last week. So even though DLTR is in the list, it might not necessarily be a buying opportunity today simply because of risk reward. So it'd be kind of fun. Hopefully you took a screenshot of that. If not, you can pop back over. The next thing I want to show you are some of our coaching session questions from last night's boot camp. You can take a screenshot of this as well. It's giving you a heads up so you can do it. And then hopefully this will inspire you to understand that the questions you ask, better questions, will lead to better trading. So we had some really awesome questions. I want to highlight one thing on last night's call, which was first you can actually, let me go. John had these 5 questions. So you can actually break this down. Now, the big thing I want to talk about here before you do this, I am very, very motivated when we have our coaching sessions. For number one, because I really care about whether you succeed or not. But number two, I want to challenge you to ask yourself, what part of the stock market is actually holding you back from seeing that extra $4,000 to $6,000 a month, or whatever the number is that makes you happy, right? What's holding you back? So John posted some really awesome questions last night, and I want you to take a screenshot of this and consider some of the questions that he had, okay? So you can see how far and how detailed John's questions are of breaking down his trade management for every single scenario. How do I manage if it's moving in my favor? How do I manage when it's moving against me? How do I scale in, scale out of those trades? Now we want to break it down a little bit further. And Larry, I don't know if Larry's on the call with us this morning, but I want to really highlight this. Larry was actually going through a period of time where he wasn't able to read the fast back and forth price action of the market. He was probably looking at a little bit too much, right? Especially frustrated by the end of the day, lost money on stocks that were moving. So raise your hand if that's happening to you right now, where the market's flying. It looks like there's this great opportunity, but you're not making money. Let's take a look at how Larry handled this, and hopefully it can help you. That's why I'm showing this, right? Looking over the trade timing and the previous day's charts, mistakes were obvious. Now, the first part of this is glorious, and I'm actually going to highlight that for you right now, which is very important. Larry took responsibility for the market actions he was taking. Raise your hand right now if you're blaming the market. Raise your hand right now if you're blaming the Fed. Raise your hand right now if you're blaming anything but yourself. Larry took responsibility for this, and he had me so fired up on yesterday's coaching session because of his answer after this. He was getting knocked around. He looked at and reviewed what he was doing, and he took responsibility for what his actions were. Now, the next part of it's actually pretty exciting. His game plan was fine-tuned using our picks. So again, every day he's talking about the picks and the filtered stocks that I give everybody. So here's the filtered list of stocks. And then actually put them into positive sectors. So Larry's actually implementing what we're talking about right now. Made me nervous, result too many trades in day 20, more trading losses bigger than winners. So what ended up happening is Larry actually is now back on track because he got back to only focusing on what matters. He was kind of going off the reservation a little bit and looking at too much, and his timing in the trade was off. So what I want to inspire you to do this weekend is do what Larry did. If you're not getting the results that you want right now, because there's some pretty awesome volatility if you have a plan and if you understand how to use it. If you are struggling, or if you feel like the market's like beating you up in every direction right now, take a step back. Say, what part of trading is actually holding me back right now? And here's the key. How do I fix it? That second part is the part that a lot of people don't focus on. They focus on, I have this problem. I have this problem. I'm not getting the results that I want from the stock market, but then they don't do anything different. Larry did do something different, and it turned it around where now he's back on track because he asked the tough questions. What am I missing? What am I doing wrong? And how do I fix it? Pretty awesome stuff, right? So if you didn't take a screenshot of those stocks, I'm actually going to give you a chance to do that again right now. So you can actually see the filtered list of stocks. You can see it's a pretty decent list. And you can also work your way over into the list of stacked order flow here for the day as well. So covered a lot of stuff today. Gave you a big list of stocks to look at and showed you how to use that list of stocks and determine whether or not those are the best stock picks right now from a risk-reward perspective. Actually, before I forget, our next boot camp starts Monday, and we're doing something we've never done before. Is we're offering a 5-day trial to the boot camp. So if you can understand all the stuff we're doing right now and you've never been in a boot camp before, pretty tough to pass up a 5-day trial. It's a 14-day boot camp. You get to try the first 5 days. Click the link below the description, see what it's all about. And if it's for you, I hope to see you on the other side. All right. Have an awesome day, everybody. I'll speak to you soon. If we did a good job, subscribe, hit that like button, and get into the next boot camp that starts on Monday. 5-day trial, worth the investment, right? Have an awesome day.